So welcome to our panel, and I'm happy to introduce you to Marco, Mirabella in the middle, and John, and Cody, Jori. And so today the panel is all about challenges and also opportunities in the insurance space. We just changed the microphone. So again, for everybody, so yesterday I participated in an event, and it was Web of Roots, and all around challenges in the industry, blockchain industry. What is keeping people from using blockchain solutions? What are the main obstacles? And this is a result. There were 6 points which we accumulated. So the first point was lack of use cases. So this is obviously a big topic, and I was keeping me from screaming, yes, we have a use case. This is insurance. And so this is my first question to the panelists. Would you see, or where do you see insurance as a use case in the blockchain industry, starting with Jori, and then maybe just everybody one sentence or two? What are the possible use cases? Of course, insurance is a use case, but what are your use cases, what you bring to the blockchain?
Yeah, so hello, thank you for inviting. I'm Jori, co-founder of Ethichub, which is focused on smallholder farmers. And we do both lending and kind of insurance, is crowd collateral, we call it. And yeah, maybe too high, I think.
Yeah. No, it's too high.
Yeah, now, no. I
don't know.
Ahora. Hola.
Now it's good.
Okay.
Keep on.
So, I see, for sure, the easy thing is to do insurance for DeFi itself, no? So it's a self-fulfilling prophecy. It's the easiest because at the end is everything fully on-chain. And I think it for sure is the things that are already with some volume and business model already in place. Can I have this one? Now, yeah. So insurance for DeFi at the end is the easy because it's everything online. When you think of insurance for the real world, I mean, you can do whatever. Etherisc is an example, or Ensuro both, of how to leverage on this for whatever kind of already established insurance. But I think also that what blockchain technology allows us is to rethink insurance, no? With new kind of business models, new approaches to reducing risk. That is not necessary like copy-pasting the traditional insurance world to the crypto world. No? As we are doing is completely different from your approach, no? That this is so focused on traditional risk mitigation. We do something which is much more risky for sure, but it is allowed to reduce risk, which is a reflexive system. As for the insured, it uses a self-token. So, okay, if everything goes well, it reinforces itself, but if something goes wrong, it is a problem because it loses solvency along the way. But for some use cases, as we are doing, no, to insurance, things that there is no data at all. No? Maybe it's an approach that for now it's working. We had covered 100% of the defaults we had with this approach. So it did work. And we are 6 years already standing. And I think it's more the problem about the user experience. If you want people in the real world to use this, for still crypto is too hard to understand, too hard to use. Now with account abstraction and gas abstraction is improving for sure, but we are still a couple of years, I think, behind of mass adoption in the real world, in the user side of the insurance, not in the protocol side of the insurance as you are doing. That's, we are already getting there, right?
Yeah. Everyone, I'm the CEO of Ensuro. So, I mean, I have a take here. So in terms of use case that work, like stablecoin is one good example. And in the case, people actually overcome all the difficulties to use it. So I spend most of my time in Argentina. Over there, there's a capital control and there was 200% inflation in the currency. So people were finding a ways to escape that and enter into the stable coin. So you see there it's strong use case. If you take the example in the US, for instance, stable coins don't have a lot of sense. So you go in the bank, you trust the bank, you can do your transaction. In Europe is instantaneous. So the leap of innovation and the leap in terms of benefits over there, it's reduced. So in terms of use cases, we need to find places where crypto make sense. Now, when you have your money in stable coins, then it's it's the next step that comes is to put money into a safe place. So you don't want to put money in the bank because you don't trust banks, so you move into DeFi. So we're seeing over there use cases in which people put money into Aave, compound, in order to generate an interest rate that is similar to what you can get into T-bills. Now, with the advent of tokenization, and I believe it's going to be in the next trend, we're seeing a tokenized treasury bills. Over there makes sense because in Latam, in Africa, in other continents, it's difficult to get that. So once you solve the problem of accessibility, then you have a strong use case for crypto. Now what we're seeing is insurance sits at the middle between the tokenization movement and the DeFi space. So as a way for people to diversify their portfolio that they have. So insurance is it's an investment for everyone. So it's an investment for someone that it's pretty sophisticated. So they want to put money there because it's uncorrelated from the market. Now, once you have people already using crypto, and once you have people that are willing to invest in that, then insurance makes a lot of sense. Where you enter in conflict with is the iteration banking rails. So at the moment, because if I want to convert stable coins into cash, then I hit the bank, and then I lose all the efficiency. So I think that connection over there is what is missing in the space. That's my take.
Hey everyone, can you guys hear me? Great.
I got a pretty loud voice, so.
Awesome. Hey everyone, I'm Don Ho, co-founder and CEO of Chainproof, the world's first and only licensed and regulated insurer for smart contracts, slashing, and maybe soon to be D&O. Who knows? I'm going to keep this really fun and keep it to one sentence, which is insurance is not a use case, right? Use cases are things that people use, and insurance then adds protection on top of that. Put another way, like car insurance or life insurance, that just is a catalyst for whatever the actual value driver thing is. And so maybe stablecoins might be the first use case in crypto, but frankly, I think the only use case in crypto that is very pervasive is speculation and attention. What I mean by that is during the US elections, there were 3 primary prediction markets. There was Kalshi, Robinhood, and Polymarket. Only one of them was crypto, and that was the largest one. So crypto is attention. If you get attention, you get adoption. If you get adoption, then insurance makes sense. We can't have insurance without the adoption. And as of right now, we're all building for this future, but if I had to be very driven by a hot take, we're still way too early.
Yeah, that immediately leads to the next question or the next blocker which was mentioned yesterday, it was the lack of access to tools like privacy, for example. Privacy, and also how can people onboard in crypto, which is a big obstacle. So maybe some words, how do you use or solve this problem? Is this a problem for you? And how do you expect, for example, in 2 years, how the world should look like, that a billion people on board in crypto and have their crypto wallets?
Yeah, so one is the adoption. The first question was?
How do you solve this problem? Yeah, so in your project, how do you solve this problem? How do you get your users connected with blockchain?
Yeah, I mean, as we don't offer super high yields, because we are a real world lending protocol, we couldn't access crypto people, because crypto people look for super high yields normally. They tend to. So we had to focus on real world, I mean, TradFi people, fintech people, lending, traditional lending, right? Crowd lending. So in order to onboard that people, we from day zero, we had to say, okay, we cannot use this MetaMask thing, plugin in the wallet that they don't understand, neither 12 words or things like that. No? So I think we were, if not the first, one of the very first use cases using Magic Wallet, which is far before account abstraction was embedded on the protocol layer of Ethereum and EVM. And I think that's super core. And we also had to create our own relayer for the gas abstraction thing. No? So we pay for the gas fees for the users, so they don't have to do all that things. And now with the account abstraction, I think is core the blending of transactions. So users don't have to approve first and then do the action, the actual action, because also that creates a lot of friction. People don't understand this approve thing. I mean, if you are not in crypto. And yeah, I think from the user experience, that's super important. Yeah, that's my take on UX.
In terms of privacy, I think it's something that will come afterwards. So, like, you first need to give like a usable product, and like generally people are, what I notice is they don't care much about decentralization unless like there's a need for it. So you have conflict, or you have like a government that it goes against you, and then like you don't like care about privacy unless like you have a personal interest in it. So if you have a lot of it, and then you have like a fear of getting like kidnapped, then it's where probably you're gonna care about the privacy and hiding your assets. So that's my take over here. And I mean, in terms of the user experience, I think account abstraction like works quite well. So it removes a lot of the problems there. What we have as a problem is the multi-chain like world, where you don't know like I mean, I was playing with like trying to explain to a non-crypto user how to receive money in crypto, and I say, so it's like I was sending money into Arbitrum, and I say, okay, sending money back to me. He didn't have it, so he couldn't send it there. So then like in the wallet there's like 5 or 10 different chains, and in like for each one of those chains you need to have like the base layer token. So that hinders a lot the adoption. With that said, like I mean, when you have like a poly market where people can speculate quite a bit, people figure out the way to solve this. So we need to find like a strong use cases, and then like you solve the initial like innovators, and then you try to smoothen out their experience in order to like increase the user base.
Another hot take. I think like the framework is really wrong. Like crypto is supposed to be invisible. Like what does crypto look like in 5 years? It looks a lot like Facebook and Instagram today. No one gives a shit, right? If I'm on Instagram, do I care if they're using GCP or Azure or AWS? Do they care about multi-tenancy? Do they care about zero latency? No. All they care about is I double click and my DM goes through, that girl or guy, they get the message, right? So I don't really give a shit about chain abstraction or anything. You just have to deliver value to the person. That is literally it, right? And so I love how we can talk about, sure, account abstraction, or we can talk about chain abstraction, but if we just focus on making something people want, the rest follows, right? So like everyone here who's thinking about being a builder or whatever, just think of your product as Web 2 first, and then what is the crypto wedge? Because again, like if something like Polymarket gets big, it's not because it's insured, it's just because it's enjoyable, and perhaps maybe we insure Polymarket after, right? And so again, I think the red herring here is like, get rid of crypto in your dictionary, right? It's actually just building something cool, and then people just come.
On this, like, what do you think, like, Polymarket was successful, and why you don't have a Web 2 version of it? Is that regulation? Is that?
Yeah, it's arbitrage. I mean, it's kind of like why ICOs are going to come back. I could just put money into like a smart contract and not worry about regulation, right? So was it because it was crypto? No, but it was because anybody could then speculate on it. And then it just happened to be that it was the crypto rails, right? Like Kalshi, they had to wait 6 years. Like I met them on YC's demo day, and they had 0 licenses, right? But like, they're just like, we're going to go this regulatory route, wait 6 years, and finally. But like, you look at the comparison, they had about $200 million in contracts versus Polymarket's $3 billion.
Yeah, but I think you are focusing too much in this regard with the speculation, ACA, investment side of things, no? And I think the real use cases with billions of users are not fintech things, but social network, for example, no? And so for a user to really use the new Facebook, no, Lens or Fastcaster or whatever, the user experience has to be amazing, because it's not because of a financial incentive that they are joining. It's more like, okay, I like this idea that I build a decentralized identity and I collect reputation or whatever, no?
It's still the wrong framework. It's just Facebook will use crypto. It's not a crypto company that becomes a social network. That doesn't work. We've seen that. Decentralized Uber, decentralized Airbnb, none of that shit works. It's just going to be incumbents that incorporate crypto, because crypto is the attention. It is the gateway drug. It is the hook.
Absolutely. Yesterday I heard a talk from a guy from Argentina, from Buenos Aires, and he's implementing an ID solution for Buenos Aires, something like a personal ID, a government ID based on Ethereum blockchain, on a public blockchain. And he told me, or in his talk, he said, it's all about UX, yeah. So, and people should never feel that they are using crypto, yeah. So that's exactly what you say. And he says, never mention the word token. So because everybody is scared away, and I think that also emphasizes what you're saying. Yeah. So, but another type of people who are really scared of crypto are regulators. So that was also one of the challenges, regulation. Yeah, in a very broad sense. Just for each of you, do you experience regulation as an obstacle, or is it a no issue, maybe? And if it's an obstacle, how do you solve it, and or where do you see potential blockers, and how you can deal with these blockers?
I think regulators are starting to really be understanding this, and also depending where in the world, no, it changes a lot. In the case of Spain, where we are based, regulators are really they are doing courses. They invited us to give them courses, so they are really interested into learning more about what's happening here, and they are quite open to new innovation. For sure, most of the things we are doing, still there is no a regulatory framework, so things tend to be illegal, not illegal. And as far as we are small, as Etherisc was saying before, most of the regulators is for me, the logical approach. As far as you are small, you can do things, no? But if you start scaling like Polymarket, I'm pretty sure regulators will come fast and say, okay, we have to take care of this. So I think regulation will come to Polymarket too very soon.
Yeah, like I mean, a hot take on this is like generally regulators are like mostly blockers in the sense that like the regulators are not innovators and they know much less than builders. So then they're trying to put a framework on something and it's very fluid. And once you put like a framework and you put like barriers into that. So if I put my libertarian like hat on, so if you remove regulation, then you come into a system in which users auto-regulate with each other. So you have a lot of people losing money, like eventually they can become more smart and then they try to like put boundaries, like searching for insurance, like understanding if there's some trusted parties giving both. So, and it was the case for like many years in crypto. So essentially like initially it was not regulation, like the market like developed into like a $1 trillion market, now we are at 3. And then the regulators started to notice and started to like trying to create frameworks around that. So ideally like we should continue doing the trend of like innovating and trying to find like self-regulating. Think that it's a barrier to entry from traditional players there. So traditional players or big companies like need the regulation because they have too much to lose. So I think need to find a balance over there. So in order to have like adoption from institutions.
I have an even spicier take. I don't think regulators are scared of crypto. I think regulators are just scared of losing their job, right? Like regulation is always reactive. It's not really proactive. And it's usually because regulators come from an authority. And if you're in a democratic authority, it's kind of have to be reflective of what the people want. If the people really want it, well, I think, you know, I can read I don't know, but if you read the tea leaves on, for example, a Trump presidency, they're not scared of crypto. The guy did an ICO 2 weeks before the election. So it's not that regulators are scared of crypto. It's more like whoever their boss is, they're scared of losing their job, right? And flip it on its head, though, plug for the BMA, Bermuda Monetary Authority, they're extremely progressive. They're not scared of it at all. They've been through it and welcomed us and you guys with open arms. And so I actually think regulators are enablers, not necessarily blockers. And like anything in a free market, like entrepreneurs, all of us, we're just going to go to jurisdictions that are pro. And if it tends to be successful or there's amazing tax revenue, well, all these blockers, they're also going to be openers to this. So I'm pretty bullish on, sure, a regulatory environment, but more importantly, I'm just bullish on optimistic governments that see the benefit and how it completely outweighs any of the downside we've seen.
On this, like, I mean, what I'm seeing, like, it's interesting is a competition against government. So you can come and choose and like pick up your own like jurisdiction of choice, and then makes them compete, and then it makes them like innovate. So this is like, I mean, there's also a trend of like startup cities and like special economic zones. So I was in Prospera, for instance, in Honduras recently, and they created a special economic zone to innovate in terms of innovation. Argentina is doing like something like that as well, and in some places in Africa. So once you have that, you're trying to push like trying to push innovation on or regulation, and it's something like pretty good. Bermuda in this is like, I agree, like it's a pioneer. So they created a framework that it's better than everywhere else. So what we're seeing is a lot of people taking advantage of that. Then what you don't have, though, it's communication among regulations. So you might have like a good jurisdiction that puts a law, and then up until a week ago, then you're going in the US, and then you need to be scared that you're going to get arrested everywhere. So that's what is lacking right now there.
Yeah, one last question. That's always my last question. Where do you see yourself in 3-5 years? And what are the main steps on the road to the future for each of your projects?
Yeah, so I like seeing ourselves like an example of how to leverage on this technology to solve real world problems, and so people start using this technology for good, because at the end technology is not good or bad. It can be used for best things or worst things possible. So I think we as innovators, as the people, pioneers, we have a super high responsibility on focusing on doing the things the right way, so the people that follows see that this is for doing great things, and not only Ponzi's, which is the problem we had in the space, that we go a lot to the impact investment space, and the problem we are facing there to get multilateral banks or traditional impact funds, etc., which are huge and super low cost of debt, etc., is that they are so afraid of crypto, because what? Because it's like, no, crypto is scams, is Ponzi's, is meme coins, and so I don't want to be close to that kind of things. So I think in order to really become like the core layer of the traditional financial, of the financial system of the world, we have to move forward to more productive use cases to solve real world problems.
Yeah, and this is I would like a world where we pass over the status of pilots. So this is something that's painful, in the sense that when you approach institutions in the real world, and they see you as a way to test in the blockchain space. What would like to happen is people see us as a more efficient solution, and they choose us because it's cheaper, faster, and more efficient. So essentially, we're going towards that direction in which we isolate the blockchain component on the example of Facebook. So you don't see what's happening in the back. So essentially building towards that direction, and then trying to compete with companies in the Web2 space and at the a level field.
If I could wave a magic wand and have something happen in 5 years, it's tokenize everything. Everything. And on any market, I can buy and sell anything 24/7. Why? That's what gets people interested in the technology, and when people get interested in the technology, then they build cool shit. So Vitalik talked about this. He used to hate speculation, and then after meeting so many people at different conferences, so many people said, I got into crypto and Ethereum because of the money. But once I got into it, I saw how fucking cool the technology was. So tokenize everything. Because if we tokenize everything and everything's on crypto rails, it's going to need to be insured after. But tokenize everything. So I'm going to take the opposite side of you, which is meme coin everything. Because the more people we get into this space, the more people that will actually build cool shit. Because let's just assume the number of developers in crypto today, 1% does something. Let's even say there's 1 million devs. I doubt it, right? That's what? 10,000 real things? Let's get 1 billion people in, and if 1% of that billion does something productive, we've crushed it, because innovation and founders are asymmetric. You only need 1 or 2 to just really make something huge. So I think if we can all strive towards tokenizing everything, insurance and all the cool stuff we're building will come after.
We are shortly before our lunch, so I have to say thank you to all our panelists, Jori, Marco, and Don. I think this was great insights in one of the key players of the industry here from very different perspectives, smaller pharma, reinsurance and risk pools, and your solutions. So I think this is pretty broad and shows also the opportunities in the next years. So I'm happy to see you in 5 years, and let's see what we can build in the meantime. And of course, I also support your claim, tokenize everything, because my boy, he's a Minecraft player, and of course he is tokenizing everything. So I think our young people, they are much closer to this thinking, and so there's a lot of things to come, and also we hopefully see some reasonable regulation or deregulation, which is would relieve some breaks. And yeah, let's work together on this. Thank you so much for being here, and see you soon. And for all the others, we are now having our lunch break, and see you again at, I think, 1:30, where we continue with our online sessions and our next talks. Thank you so much for hearing.